Going on, beautiful people, and welcome back to another installment to Trading with yours truly, Alex. And today is the official day of the Trading Foundations Bootcamp. And I believe the most important facet and component to trading is hopefully you guys read the disclaimer. If you didn't read the disclaimer, this is not financial advice. This is for educational purposeless purposes only. So I, being Alex Warner, am not responsible for any trading decisions that you may make based off of this educational content. You do with this information what it is that you wish. Now we're jumping right into it. The most important concept in trading is price and time. But today we're talking about time because time is the most important portion, time and price. But today we're talking about time because when I first started my trading journey, and hopefully you guys can see my charts. Don't worry, I want you guys to stare at this naked chart here as I give a little commentary. That way your mind can start, postulating some ideas. When I first started my trading journey, I wasn't privy to how important time was. I mean, if I had the market structure of things, which is some of the things that we're going to be going over at a later date in time for this boot camp. But for me, I thought if I just had the market structure, I was good. I was golden. And I've been trading for 6 years, and I feel like, not I feel like, let's take our feelings out of this for a second. I know that I was missing one of the key components to me being consistently profitable, and it was the time piece. I mean, I understood that we had trading sessions, which we'll go over the trading sessions as well, but I didn't understand time. I didn't understand that there was specific windows when price was more likely to move in my directional favor. I didn't understand that the market was an algorithm, and it was algorithmic, meaning it moves with precision. In order for an algorithm to move, it's not only based off of certain research, but it's based off of time. What time will it do these things? And I was trading whenever instead of when it mattered, or when the session began instead of in the key time frames within the session, which we'll go over within this video. And now that I have been aware of time, I stopped chasing indicators because I was real heavy on indicators when I first started. I stopped asking what should I trade, and I started to ask, when does it move? Like, when is it more likely to move in high probability towards my directional bias or the narrative? And this mindset shift changed everything for me. Now, I want to be very clear on the concepts that I trade. I am an ICT Smart Money Concepts trader. I'm not the creator or the originator of these concepts. I know a lot of people like to rename these things and try to make it their own. I am all about originality and authenticity. I am a student of Michael J. Hudson, the Ghost in the Machine, ICT. I'm pretty sure plenty of you guys have heard of him. These concepts belong to him. But just like every good teacher, he desires to teach his students. So my responsibility, my role that I'm playing with my community because not everybody may take a liking to his delivery and his content. And if you've listened to his commentary, he is a character, but sometimes most people don't like the character that he plays. My responsibility is to teach you accurately, respect the framework, and help you avoid unnecessary confusion, not only with these concepts, but with the market. And the good book, this is a I'm a faith-based trader, and the good book states, and the Bible, by the way, to everything there's a season and a time for every purpose under heaven. Meaning this, everything in life operates on time. I am going to drill this component into your head that time, time is the most important thing when it comes to trading. I'm going to drill this into our head because everything in life operates on time. It's based around time. Your work, your family vacations, your appointments, seasons, and trading is no different. It's the most valuable asset that we have. I mean, we all hear the phrase, and most successful entrepreneurs, businessmen, businesswomen say that time is the most precious commodity that we have, meaning it's non-renewable, it's not refundable, and it's non-recoverable, meaning you don't get this back. So we can lose money and we can make it back, but we cannot lose time and get it back. That's why we schedule things in our life. That's why time must be respected when it comes to trading. I want you to think of time as a bus, the bus stop. I mean, I haven't caught the city bus or the school bus in a long time. And if you don't know when the bus arrives, more than likely you're going to repeatedly miss it. You're going to repeatedly miss the bus. And this market here works like that bus stop. Most traders miss moves because they don't know when price is most likely to move in their favor, to move in their direction. Time tells you when to look, price tells you what to do. So we are going to focus on where to shift and look for our setup within time. Because price, again, I stated it's an algorithm. It's algorithm. It's algorithmic, meaning on how it moves. Algorithms are programmed to move in time into certain key areas within that time frame. And the market moves from discount, discount is here, to a premium. And from premium, as we're seeing, let me grab my arrow. That way I can show you guys. That way you can follow along with me. So price moves from the algorithm moves from this is the discounted to the premium is where it moves. Where's my path? That's what I want. I don't want the arrow. I want my path. Good. Here we are. Moves from discount to premium, from premium to discount, back into a premium, back into a discount, back into a premium, discount, premium, discount, premium, discount. Does that make sense? That is the algorithm, and it moves at a certain time during specific sessions with specific men. Tongue twister today. specific windows, high probability setups. Try to say that three times fast. Do not exist all day. I'll say that again. High probability setups. My goodness, I'm not editing this out. We're just going with this. High probability setups do not exist all day. They don't. Professionals wait for time. We do not trade just whenever. You want to trade at the most high probability time frame possible. That way, the move, the market, the algorithm can work in our favor. It's that important. Now, along with time, we have to identify time frames because time is the general concept. But when we get into the time frame, there's an importance here. So you see these lovely labels up here. We have the monthly. Let's zoom out. The monthly, the weekly, the daily, 4 hour, 1 hour, 15 minute, 5 minute, 3 minute, 2 minute, 1 minute, down to 15 seconds, and so on and so forth. Now, what is the importance behind these time frames? We are going to use these time frames. They're all used for their specific roles. Now, they're all structure. They're all market structure. They all deliver price. But the big picture, this is our higher time frames, are going to be the weekly and the daily, is what I typically focus on. Sometimes the monthly, but for the majority, the main time frames that you're going to use is weekly, the daily, the hour, the 15-minute, which is our bellwether chart, and then we use the lower time frames for our entries. Keep in mind that each candlestick, when you click a time frame, each candlestick on this chart in this time frame, the weekly, is 1 week. It serves as 1 week of price. So that's Monday, January 12th, Monday, January 5th, Monday, the 29th of December. These are all weekly candles. So what we're seeing here is a week's worth of trading in one candle. But as you look at the series of candles, it makes up a structure, a market structure. And with the weekly time frame, what the weekly time frame is used for, it is going to be used to refine our bias, mark up the weekly highs and the weekly lows, which we will get into more of higher highs, higher lows. But this is a high here. You would mark up your highs and lows, your relatively equal highs here, relatively equal lows here. We'll do that in a different time frame. Well, not time frame, excuse me. We'll do that in a different color. And we can do the nearest area. These are also relatively equal lows here. I mean, equal highs, excuse me. So what happens when you talk too fast. And then you also have some relatively equal lows here on the weekly. And we'll make those red. And we'll typically label them here. This is your sell side liquidity. from the weekly. What you do on one time frame will carry over into the next. Let's go down to the daily. This is the daily time frame. Now, each candlestick on this time frame here is 1 day, represents 1 day. And then you have a series of candles that again make up the market structure. So notice how we marked up the weekly highs. And this is from October. That doesn't pertain to us right now. We would focus on this region of price action here. This is the reason of price action, the recent price action that we would focus on within this area here. Okay. But let me remove all of this. And as we continue to scale down, we would refine these areas. But let's go back to the daily time frame for a moment. So the weekly time frame is where we refine our bias, mark up the weekly highs and lows, and define our next draw on liquidity. Think of your weekly time frame as the roadmap for this week's trading. Meaning, where is the market likely to draw to this week? Where is the obvious area of liquidity? Which, again, we are going, be patient. We are going to get into the nitty gritty of that as well. And the daily time frame. Now, what is the daily time frame used for? Like I already told you, that each candlestick represents and serves as 1 day. We're going to identify the premium and the discount. And then we're going to frame, we use the daily time frame to give a framework to our intraday expectations. So your intraday charts are your 15-minute down to your 15-second charts. The daily time frame is how we get the intentions of where we're going to look for our entries or for our setup as we scale down to the lower time frames. So your bigger time frames are going to it's going to show you and serve as your overall big picture of where the market is most likely to go. Okay? Hopefully you're writing these things down and you're tracking with me at this point in time. Now, every candlestick, again, if you didn't write this down, serves as either a 1 month candle, 1 week candle, a daily candle, a 1 hour candle, a 15-minute candle. So candles are not just price, they are time and price. Remember, time is the first component, price is the second component. So time, again, if you didn't write this down earlier, I will say it again. Time tells you where to look. On what time frame am I looking for my setup? And price tells you what to do, meaning the directional bias. So when you see these components merge together, this is where we get the high probability for our setups. Is this making sense this far? Hopefully it's making sense to you. And I don't want us to ignore either one. And again, in the next video, we'll go over price. But ignoring time leads to the misreading of price. So if you don't have the right time frame, you will misread or misinterpret your entire bias. The entirety of your bias will be misinterpreted. And you won't have a clear direction of where the next obvious draw of liquidity is going to be. Now, I hear some of you asking, well, Alex, why can't I just use the 1 minute chart? That's a great question. Now, you can use the 1 minute chart to get an idea or form a narrative and a bias, but without the price continuum theory, meaning what is done on the daily is done on the 1 minute, it's done on the 2 minute. It's the price continuum theory, meaning it is going to continue in that same direction. However, it's going to look a little different because in order to get this uptrend here within this one itty bitty candle, because it doesn't look like a lot. You're like, man, okay, let's look at this itty bitty candle. I'm gonna highlight this candle here, today's candle. And I'm not gonna, let me not extend. Don't extend to the right. Let's just highlight this. Let me show you for all you people in the back. Let's go down to the 1 minute time frame. Now look at where we highlighted. We highlighted, let's go back to the daily. Let's zoom in. Just this one piece here. Let's move it over some. Right here. Just this one candle. Let's look at it again on the 1 minute. Now let's zoom out. Zoom out. Zoom out. Scrunch it up. Let's go here. Look at all these candles. Each candle on this chart, the 1 minute time frame, serves as a 1 minute candle within that daily move. Look how many candles you have within this one daily candlestick from the daily time frame. It's so easy for us to get lost on this chart. If I were to ask you, okay, where's the high probability setup? Where is it? You couldn't tell me, right? Because you have price, but you have price without context. Time gives you the context of where to look. Price gives you the detailed information. So they work hand in hand. But if I don't give you where to look, you'll just be looking. And that was me 4 years ago. Imagine just coming to the market with no idea of when the high probability setups are forming. Like, oh, let me just pick one. I'll pick here, and maybe it's going to sell, maybe it's going to buy. Nope, I don't have the context. Oh, let me pick here. If you don't have time with price, you won't have the right context. And this is why time frames like the daily, like the 4 hour, like the 1 hour, to get your big picture, to get your directional bias, like, okay, let's define where are we in price currently. This is where market structure comes into play. We're here. Okay, are we at a discount? Are we at a premium? Once we have the bias on where we're looking, I'm not going to tell you my bias as of right now, but I did mark up my charts. I just have these annotations hidden for you guys. Based off of this, where are we headed? This is where the bus stop analogy comes back into play. It's okay, I know what time to be there. In a sense, I have the overall big picture of like, okay, I'm on the daily time, but when is the exact time that the bus is coming? When is the exact time that the market is going to move in our favor? So I'm glad you asked. Let's define the sessions. And I'm going to use, let's use the 1 minute chart. Hopefully you guys are tracking with me so far and I'm clearing up some things. So we have three major sessions. You have the Asian session, and that's exactly what it's called. I'm not making fun of anybody. You have the Asian session, you have the London session, then you have the New York session. So let's define the Asian range and the Asian session. Asian session. Are you ready? I'm going to use my vertical line here. And I'm so glad that it brought this to my remembrance is please set your charts. I know that you guys see my charts in, I use military time, but to set your charts, everything operates, the algorithm operates not only off of time, but time zone. So I live in California. It's PST time for me, but the algorithm moves. It's going to be easier for you to follow this when you have the right time zone. So come down here to your chart. This is Trading View, and I'll break down my Trading View settings in a later video. But this is Trading Video. We're going to scroll down to don't pick your local time because it'll throw off how you read the algorithm and you'll be all wrong. Trust me, trust me, trust me, trust me. I was doing this backwards and I was using my time zone and wondering why I was still missing moves and it just wasn't pretty. Everything this market operates off of Eastern Standard Time, New York time. This is where the market is made around this time. So take your charts, scroll down, New York UTC 5, and we're viewing this in electronic trading hours. And again, I'm using military time. It is not 15:49. It is 12:49 my time. So this is military time, Eastern Standard Time. If you're in California, they're going to be three hours ahead. If you're on CST time, the New York is, I believe, just an hour ahead of you because CST time is 2 hours ahead of PST time. Okay, so enough of CST, EST, and PST. Make sure your charts are set to UTC 5, New York. That's all that matters right now. And you don't have to do military time. You can do regular time. That is completely up to you when it comes to that. But I use military time. Now, back to it. I'm sorry. So we are talking about, I want to write it big so you guys can see it. The Asian range or session. Take my vertical line. The Asian range and session begins at 7 o'clock p.m. Eastern Standard Time. So let's go to my chart. We're going to come here. 1900 would be 7 o'clock. So 7 o'clock or 1900 is going to be the start of the Asian range or session. So I'm going to write it this way for you. 7 p.m. is when it starts. When does the Asian session end? It's from 7 p.m. And again, 7 p.m. Eastern Standard Time to 5 o'clock a.m. Eastern Standard Time is defined as the Asian range and session. Please write that in your notes. Okay. So that's 1900. Grab my other one here. Vertical line, 5 o'clock is right here. Now, with this information, what do we do with this information? I am not a Asian session trader. I am not. There we are. This is the Asian range right here. Asian session. Doesn't seem like much, doesn't seem like a long time. But this is the purpose of your Asian session is this is the range building, liquidity forming. It's not, it's a big range, but typically in this market setting, it's a lot of consolidation of orders and smaller candles, not a lot of drastic movement when it comes to futures, when it comes to the indices. This is typically, again, the formation of liquidity, setting up your higher highs and your higher lows, or your relatively equal highs and your relatively equal lows, to be used later for London, our London session. So this is the Asian session. Now, how would we approach this? So let me be clear here. Let me write this down because I know some of you guys are wondering. So this is going to be 4 p.m. That way you don't have to do the guesswork. For those of you who have the pleasure of living on, the west side of the world, PST time, it's going to be 4 p.m. to 2 a.m. I read some of you guys' mind. That's what it's going to look like. So that's the time frame that you you can look at it. You got to love Grammarly, don't you? Got to love Grammarly. Anywho, this is the Asian range and the Asian session. Now, I'm not going to go into grave detail in this video on market structure, but how would I approach this session? Since I'm not normally trading this session, is within this range from 7 o'clock all the way to 5 o'clock. I'm looking for the highest high formed in this range and the lowest low within this range. And which brings me to kill zones. The kill zone window for the Asian session is going to be this window here. Let's go back. This is our window for kill zones. Now, I don't want to confuse us too much because I want to keep this as simple as possible. Kill zones are going to be specific time windows when the algorithm is most active, when liquidity is targeted, and when PD arrays are respected. So that's the kill zone. These are not random. These are periods of maximum efficiency and high probability setups. So trading outside of the kill zone is, I'm not going to say not beneficial because again, you have this whole Asian range here, but time is fractal. So remember, let's go back to the big picture for a moment before I give you the kill zones within the Asian range, and then we'll move on to the next range. Time is fractal. So the big picture, our daily, our weekly, the monthly, the 4 hour, 1 hour, our big picture time frames give us exactly that. They give us the grand overview of price. When we get into the nuances, is the smaller time frames, like the 15 down to the 15-minute down to the 15 seconds. That's what we mean fractal. It's price within price. That's the price continuum theory. It's price within price, but the lower that you get into time, the time frames, the more details that you're going to have. Now that we have this entirety of the Asian range marked out, we're going to get specific, even more down to the nitty gritty of the price and time within a certain or specific window. So the kill zone, where most of your high probability setups are going to form for the Asian range and Asian session, the kill zone is this small window here. It is going to be from 7 o'clock p.m. to scroll too far, midnight. This is your kill zone, your kill zone window for the Asian session. Let's do it here. Kill zone. Give you the time again. 7 p.m. This is Eastern Standard Time. 2 midnight. Eastern Standard Time. So now it makes your setup, or it narrows your trading window, but also it narrows your perspective down to just this time frame. Now, considering we have a large window in the range and in the entirety of the session, the kill zone is just the small portion within the range. And that's here. Again, that's that candle right here. This candle here would be the low of the range out of the entirety of the range. but the low of the kill zone. And where are we right here? This would be the high within this kill zone. So look at this window. Midnight is the official turnover point. Your midnight open to the next trading day. So midnight open, New York for the New York Open, but midnight open, the turning over. Okay, let's do that a different color. Let's just do that purple. And we'll do this liquidity blue. This is going to be your Asian, your high. We call it buy side liquidity. And we're going to be Asian high to the left. Everything you own to the box to the, okay, sorry, impulsive thoughts winning. To the left, to the left is where I like the time frame. Now, remember what I said about, let's go back to what I just said about the Asian session. This is typically your range building and liquidity formation. So liquidity is your higher highs, higher lows that are going to be relatively equal. Relatively equal. These are relatively equal highs right here. These would be relatively equal highs. These are lows, 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 relatively equal lows here. Again, we'll define liquidity in detail, but when we're breaking down the range, I told you this is forming a range. This is your range building session here from 1900 all the way to 5. Now look what happens, because midnight is the turning over point. We're still in the Asian range overall, but we're now outside of the kill zone. Now look what happens here when we turn over at the midnight open. Look at this buy side liquidity that we have forming right here. High probability. What makes this high probability setup right here is, or high targets for liquidity and high probability to be reached or targeted, is this high is higher than this high here. Let's zoom in some more so that way you can see it. So this high is higher than this high here. Or you can use these relatively equal highs. This high here is higher than this high here. Okay. I'm building the framework for us. Building the framework. Let's zoom out. Let's zoom out. Let's zoom out. Okay. Let's go back into it. So look what happens at midnight. Midnight turns over. Remember we said the Asian is the range building, the liquidity formation. What is consolidation or consolidating? The market moves one or two ways: up, down, or consolidates, meaning moves to the right. This is consolidation. Draw a box within the box. We're going to highlight this here, and that way you can see it. That's consolidation. So you have the range, the low of the range, the lowest low of the range. Let's zoom out. It's down here. The highest high in this range currently from here to here is going to be here. I told you the market moves from premium to discount and from discount to premium. So we moved from a discount into a premium, moved from the premium down into this discounted area. So this was an area of opportunity that you could have bought. This is some liquidity that you could have sought after. Back into a premium after taking out these highs. Comes down into a discounted area. But what does it do? This is what consolidation looks like. So the market moves. Let's go back to our path. Market moves. Let's go premium to discount, back to a premium to a discount. Then it does this right here. It consolidates. Just the accumulation of orders back and forth. Typically, when price is consolidating, we do nothing. We just watch it consolidate until midnight turns over. What happens after this midnight? Price comes, targets the Asian kill zone high, takes it out, moves back into this range here, this discounted range, and then takes out this high here. Okay, that's the Asian session, and that's the Asian kill zone. So you have the Asian range. Let's go back, review. Asian range and session is from 7 p.m. Eastern Standard Time to 5 a.m. Eastern Standard Time. Now, the kill zone, again, time within time for the highest probability setups are going to be from 7 p.m. Eastern Standard Time to midnight Eastern Standard Time. In this session price, there's no real significant movement. This is your range building, your liquidity formation, the typical characteristics of your Asian session is the consolidation. Again, setting the highs and lows that will be eventually targeted at a later time. Is this making sense? Are we tracking? Okay, moving on. Moving on, moving on, moving on. Let's delete this from our charts. Moving on to our next, the start of the next session. So what you're going to have is overlapping. And what do I mean by the overlapping? Is the overlapping of Asian and London. Now, again, the Asian session begins at 1900 or 7 o'clock. Let me say 7 o'clock because, again, I don't want to confuse anybody. It begins at 7 o'clock p.m. Eastern Standard Time, and it ends at 5 a.m. Eastern Standard Time. That is your entirety of the Asian range. Now, the London open is here, 2 o'clock. 2 o'clock starts, let's go to it, our London session. That is 2 a.m. Eastern Standard Time. That way we know. Until 10 a.m. Honestly, we can go 11. I believe it's 11. To be, it's 10 to 11, but we'll use 10, 10 a.m. Eastern Standard Time. Now, this is where this session, again, overlaps with the Asian session because the Asian session closes here. This is the close. 5 o'clock a.m. is the close of the Asian session. But the 2 a.m., the start or the open of the London session overlaps within this session. And this session closes the London. Let's go to 10 a.m. 10 a.m. Okay. Now, this is technically the London and Asian session together. What you would do in the London session is the same like you would in the London session or the Asian session. Hopefully, I didn't say that backwards. What you do in the London session was typically what you would do in the Asian session. Okay. Brain fog for a second. You would mark out the high, and we would already carry over the low. This is from the Asian session. Remember what I just told you is that inside of the Asian session in range, it is typically your range building and the liquidity formation. So we marked out this at 7 o'clock p.m. and we just carry it over into the next session. You see that it wasn't rated or anything. Only the high in the kill zone was rated. This kill zone low was not. So we have the kill zone here. We have some liquidity here with the relatively equal lows here. But what happens in this session? So we have now created a new high. And what did I tell you? Price moves from premium to discount and from discount back to premium. So think of it this way. We're in a premium. I use this analogy is that would you buy your dream car or your dream house in a premium market, meaning you're paying top dollar for this? Would you buy here, or would you want to be the person selling someone their dream car or their dream home at premium pricing? You typically would want to sell it to them, right? You don't want to be the consumer here. You want to be a producer here. So I'm looking to sell the market back to a discounted area using old inefficiencies, which are fair value gaps, imbalances, which we'll cover in detail again in other videos. Be patient with me. Be patient with me because we're going to get to them. I would use old inefficiencies and relatively equal lows to target into the discounted area. Now, with a discount, this is where now your dream home, now your dream car, it's on sale for half price. Meaning, let's say your dream car is a Lamborghini Urus. It's a $375,000 car, but it's on a discounter. Now, the first thing that we think about is what's wrong with it. If it's on a discount, If it's half off, something is wrong with it. And that is just our consumer brain, but we need to think like producers. One of my mentors have said to me, which is powerful, only fools pay full price. So, meaning in this, I want to be the one that's buying my dream car or buying my dream car or dream home, excuse me, and dream car for half off. I don't want to pay full price. So I would look for areas to buy and to target obvious areas of liquidity, like these higher highs here, or your inefficiencies and imbalances within here. Again, which we'll go over in grave detail. Okay, so hopefully that's not confusing, but I wanted to break down premium and discount for those who are not tracking to just simplify it to the simplest degree. So again, we already had this area of liquidity marked out in our Asian session kill zone because again, we're still typically in the Asian session until what time? Right here, 5 o'clock. 5 o'clock. That's when the Asian session is over. So no more overlapping into this session. This is now all London session from here, from henceforward. So we have our London here. This is going to be our Asian slash London high. Now, what did it do? If we already targeted the premium, the relatively equal highs, where would the next draw on liquidity be? It would be down here on those relatively equal lows from the Asian kill zone. You see how it's starting to form in your mind. Entries are going to be easy when you understand price and time. But entries are simplified by time because it just narrows the window on what you have to focus on instead of the entirety of the range. And look what it does. Now, the Asian session is over at 5 in the morning. London session begins at 2 a.m. What is the kill zone? Because each session has a kill zone. The London kill zone, let's go ahead and type this out. The London kill zone. And it's looking like we're gonna have to do a part two to this after this because I want us to stay sharp, to stay focused, and I will release part two of this after we break down the London kill zone. So the London kill zone, where our high probability setups are forming, and we concentrate on this time frame solely, is going to be 2 a.m. to 5 a.m. Eastern Standard Time, with the 4 o'clock, the 4 in the morning time being the sweet spot. The sweet spot. Now, I don't trade London either, but I use London as a reference. This is why the saying goes, if you're on time, you are late, but if you're early, you're on time. When you are in the market early at your respective session, once we're defining these sessions, because again, this is around what, 10 o'clock PST time, the start of this, around 10 o'clock, I believe. No, 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 not 10 o'clock. Let me do my math real quick. What is it? 3 hours behind. The one 11. So 11. Okay, 11 our time into the wee hours of the morning. I'm not up around this time. I'm going to be asleep. But I can still use this time frame as reference to frame my overall bias and narrative for the New York session. You see how it all plays in part with each other. They all play in tandem with each other. So 4 being the sweet spot. Now, if you are not an early riser, but you're up in the wee hours, this may be the perfect time frame for you. And we're going to define that. You'll find your groove based off of your schedule. And that's the beauty about trading, is that you can trade at any time frame that fits your schedule. You don't have to be glued to the charts 24/7. You don't have to do that. It gives you the flexibility of coming and going as you please, but show up early. But show up early. And so that's why I love trading personally, because it offers you the luxury of fitting it into your schedule. But if you know the type of session that you're going to be trading, it's ideal that you want to arrive earlier than the time frame that your session is going on. That way you can use the previous sessions to frame your bias, or to confirm your bias, or to read price and price action to get a narrative in a sense of where price is going at a particular time and what to be looking for is going to be pivotal. Because again, the bigger picture, the bigger time frames, you should already have your bias for the week. Now you're just fine tuning on, okay, where is price currently? What time is it? And where is it looking to go in this session overall? Because the daily time frame, the weekly time frame, again, these candlesticks are being printed one day at a time or 1 week at a time. But how we get a part of the move is entering on the lower time frames. So that's why it's so important. So the sweet spot being 4 a.m. So again, we've already taken the buy side liquidity here. Now we're moving from the premium down to the discount. What is the next obvious areas of liquidity? Well, we can now look to the left. This is why I talk about going back to the previous session. Where are some smooth, relatively equal lows or lows? Here, we'll do them all in red. That way you can see. I promise you, it's all going to make sense. I don't want to jump ahead of myself because I'm going to explain market structure, but it's impossible. I love this. I love what I do. It's impossible not to talk about the next obvious areas of liquidity. So now that we have that framed here, where's price smoothest? Here, 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 here. So these are some reference points and some guides that we can use if we're going to be a London trader to frame our narrative. So again, we have the beauty of hindsight, meaning the move has already happened to where we can go back and see these things. If you lack the confidence in entering price while it's booking, then go build the evidence by back testing. And this is how what I'm doing now is actually back testing and journaling right before your eyes, but I'm explaining price that has just recently happened today. So this is where price is smooth. So let's look. We're targeting. I'm not even going to go on where I would have entered or where you could have entered. But look at price booking. Takes out this liquidity here. I said 4 o'clock is the sweet spot, right? Oh, I'm telling you, I don't want to give it away. I don't want to give it away. I don't want to give it away. I don't want to give it away because I'm getting ahead of myself. Well, look here. We failed to make a higher high within this region. You could have used this here, or time is important, right? So look, let's look. 4 o'clock is it's the start of the sweet spot, right? I just want to show you the beauty of time. It's because I'm getting ahead of myself, but I just want to show you the beauty of time. Let me show you. We have the taking or the market structure shift. We're going to go over what a market structure shift is in the video. I just want to show you the beauty of time in the algorithm, right? So 4 o'clock is where? 4 o'clock starts the sweet spot. Let's look. Price fails here. We come back at what time? Here, 4:08. Each candle is a minute. 4:08. Let's look here. The market structure shift. This is, I'll get into what this fair value gap is called. It's a SIBI, but I'll get into that and I'll explain it at a later date. Let's look at it here. 4 o'clock is start of the sweet spot. Look at this market structure shift. Where would you would have entered? We enter in here. We want to see price respect here. So let's look within this window. Here. Now, that being the sweet spot, how you form your entry, stop loss goes here. I'm going to define what a stop loss is. This is in the time frame of the 4 o'clock window. We target it here. It targets here. Where else does it target? It gets all the way down to this area here. You see how easy it is to form a setup? No, I get it. Alex, this is hindsight. I'm taking the same approach based off of the information that I have, based off of the time frame that I'm trading. This is why time is so important, because you can frame these moves and you can frame these setups. And this London session takes out the Asian lows and creates lower lows. And this is, let me just go over this real quick. This is the London kill zone. London session completely overlaps into the New York session, which we'll get into next video. And the purpose of the London session is for your manipulation. It's the manipulation, the expansion, and the attacking of the Asian range, which is exactly what happened. It attacked the Asian range. It attacked the Asian lows. This often creates our displacement and our directional clues. This was giving us the directional clues for the day during this session. So if we're attacking Asian lows and we're forming, this is the Asian high, but also the London high, we're forming highs and we're attacking the lows. So in the next session, which is the New York session, which I'm not going to get into in this video, we're going to do a part 2 because I want you guys to be able to digest this video in its entirety. Where does the next session hunt? It hunts and attacks the London. Do you see how the time frames are starting to play out right before our eyes? Right before our eyes. So the homework I want to give you guys before I do a part 2, the homework I want to give you guys right now, we defined the London session, we defined the Asian session, we defined the London kill zone, we defined the Asian kill zone, and in part 2, we're going to go over the overlapping of the London session into the New York session, and then we're going to go over the New York session and the pre-market and what happens 70% of the time. Listen, I'm excited. Hopefully you guys have gained some insight from this video. If you missed the time frames for the Asian session, rewind the video back and you get the sessions. I'm not going to re-go over them, but our homework, let me get to the homework. Let me get to the homework. And to be honest with you, in the next video, I'm going to bridge the gap, not only finish out the session, but I'm going to finish out time and I'm going to put price together into one. But I want to give us the homework. I don't want us to trade. I just want us to study. I want you to watch the Asian session. I want you to watch the London session. I want you to mark up the session highs and the session lows. And I want you to journal when displacement occurs or when expansion is happening. So displacement, let's go back into it. This would be your, after the shift, your displacement. Let's go to my path here. This would all be your displacement, displacing and continuing to displace lower, and expansion. The expansion move is also to the downside, but also to the upside as well. But for right now, I just want us to, again, mark up back tests. I gave you the time frames. I don't want you to be up for these time frames. Now you can watch them live if, again, if you are you're not an early riser, but you're a night owl. Go back to the sessions that I've outlined, and I just want you to mark out the session highs, the session lows, and watch how Asian operates and how London goes to attack the Asian. And do this for at least 5 days. Do this on the weekend because part two is going to be dropping soon. I don't want to give it, I promise you, I don't want to give it all to you right away. I want you to take this information. I know this is a long video, but please stick with me. We are going somewhere. We are going somewhere. I want you to observe. I want you to screenshot. I want you to annotate, mark up your charts like I was marking up your charts. And then till the next video, Lord willing, we'll continue with the New York session and kill zone. And then we'll get into price and the structure of how price moves, essentially. We know that time, but how does price move? I know it moves up, it moves down, but the higher highs, higher lows, relatively equal highs, relatively equal lows, and we'll get into defining all of those things. So until next time, until next video, let me go ahead and stop sharing my screen here. I want you guys to see my face. Oh, my camera's not on. Huh? So until next time, until next video, this is Trading with yours truly, Alex. Hopefully you've gained some insight from this video. So until next time, Lord willing, grace and peace.